Here we go. Now we're live. So when I'm looking at the spiders, I'm seeing possible downtrend here, but it's lower highs, lower lows, or is a pennant? Is it a pennant? It's basically not bearish enough to do anything. It's not bullish enough to do anything, right? So this is what we call consolidation. It's hard to trade, right? But we'll look at the other indexes. I'm going to go to my tags because my tags, I have it as critical. And that is critical when it's on the moving average right there. It's trying to pick a trend direction. So on the live agenda today, fast 5 picks. We're going to go look at those July 8th picks. That's a dojis right now. And what we're looking for is the market trend, sector trend, and the best setups that have the possibility of a home run. You know, we want those best movers. So to find that, we look where the big money's flowing. The big money flow will make the sectors go up the strongest or the most bearish. And we had some news today that kind of changed the market sentiment. And we're using as our system the payday cycle, which is a combination Heikin Ashi MACD right here, right? And a bunch of Gino trading gems along the way. The Heikin Ashi MACD, do you have a system? Do you have a system that you use? Do you have an indicator to confirm trend? Do you have a candle or line chart or OHLC chart? Do you have a chart like setup with moving averages and candles that give you a red light, green light system? Heikin Ashi is like a handicap. It really does tell you when to buy and sell. When you look at classes, because I've taught many classes and I've been to many classes, they always give you what's called textbook examples. They always say, look how easy it is. Wait for the doji. When in the next expansion candle, buy. And look how good. And when you look at examples, they're textbook. They're clear cut to make it easy to learn. But question for you, is it always this perfect and pretty? So when you go into your actual, you go, I don't see I don't see that pattern. I don't see, why is it, I mean, this one's green for like 20 days, right? So Heikin Ashi is a handicap. It fills in and lets you know, hey, the average price, it's averaging the price bar by bar, is still going up or down. So we look at today, knowing it's a red candle right now, most of the time, not all the time, like sometimes you get a 1 or 2 day red candle and then it goes back up. Here's a 3 day, then it goes back up. So it's not going to stay red for very long if it's above the 20. Do you notice that? It doesn't stay red very long when it's above the 20. But when it's below the 20, it could stay red longer. Why? Because above the 20 is usually a bullish trend, meaning more green days, and the average price is going up more than it's going down. That's why it's trending up. And vice versa, there's less green days when it's below the 20. Did you notice that? Less green days, more red days. You put together with the RSI adds up the green days and subtracts the red days and gives you a positive above 50 or whatever. You almost don't even need the RSI. And you almost don't even need the MACD because when these are expanding, that's momentum. And you can see it right here. And when it stops expanding, it starts slowing down. But look at where the MACD says right here. We had some expansion cycles here. What happened to the MACD? And then we start doing this. Now, what we need to see is the MACD is trying to decide what to do. The stock's stuck on the 20. So if it closes below the 20, you can start seeing more red days. Now, if this was a red candle above the 20, we'd say, you know what? It's probably going to pull back to the 20 and turn back to green day, and we get that run. So the red light, green light system works really well with Heikin Ashi, but the internals tells you a lot. And then it actually gives you setups based on Heikin Ashi. This is like, I don't know, this is better than Wall Street Journal because it breaks down whatever I want it to break down. And if you're a technical person or engineer, this stuff has got to be exciting to you. 49, let's remember, can you remember this? 49 RSI. So 0 to 45 is what? In fact, let me give you a visual. That means if you have 100 RSI, if you add up the last 14 candles, they're all green. They're all green. They're all making highs every single day. 0 means if you add up all your candles, all your green, and subtract your red, they're basically all red. is the middle. That means if you add up the last 14 candles and stack them up, you add up your green and then you subtract your red, you end up with 50. That means based on the price action, it doesn't mean 7 candles are red and 7 are green. It means that if you add up the price move of the green and subtract the price move of the red, 50. Now 50 is dead, not dead. We'll just call it perfectly neutral. Because last 14 days, the price hasn't moved. Okay? It's even. At 55%, the green candles are winning. So at 55 and up is almost always bullish. I can almost say always, but we don't do that in the financial. We don't give guarantees because people will hold us to that. So most of the time, below 45, bearish, almost always. So what's this set? What's in here between like 54 right here? That is your neutral. That is your neutral area. See that? You guys see the visual here? So 55 to 45, just think about this. It usually pulls back like 51, then goes back up. When you start crossing 50 and going 49, that is going to be most of the time critical. When you start going close to like 47, right? Because we were bullish. Remember the breadth indicators, the bullish percents? This is the OG of indicators, the advanced decliners right here. This is the OG, the original gangster of internals. On the New York Stock Exchange, we had 609 advancers, 1,900 decliners. That's a different, who's winning? Decliners are winning by 1,300. So this is a pretty big, that's like 3 declining stocks for every one. We haven't seen that in a long time, have we? That's a lot of selling, a lot of stocks with red candles. On the NASDAQ, this is pretty easy, 3 to 1. On the NASDAQ, a lot of selling. So internally, there's 3 times as many stocks down than there are up. You guys see that? What is strong today? What is strong? If you look at the green stocks, energy. Why is energy bullish all of a sudden and defensive? We're doing so good. And of course, when you look at what's weak, we have it. Materials, discretionary, communications, financial, healthcare, industrials, real estate. Well, broad pressure as oil following fresh, brand new, fresh out of the oven, U.S. strikes against Iran. Ceasefire is over. Back to war. Darn it. We know we don't like a news-driven market, especially when it's a surprise. But not only is the ceasefire over, but there was an announcement that as early as tonight, we're going to start bombing like crazy again, which is never good news to wake up to, right? I mean, I want to wake up to, hey, everything's bullish, everything's rosy, all the sectors are up, peace and love and all this stuff. And hey, life is good. But the news, guys, the war's not over, Verizon is a bear. Is it too far off the moving average? Yes or no? Now, me personally, there's an emotional thing in here where I'm like, I don't like to short it. Why? Because it's got such a good dividend. Have you guys seen the dividend on this? On Verizon? If you go to financials, it's hard for me to short a stock with such a great dividend. It's shareholder friendly. See this? Verizon. And look at this dividend. Is that a good dividend, yes or no? 8%. What do you get at your bank per year for saving your money? Is it 8%? What do you get on bonds? Bonds are about what? 3 point something to 4%. It's double the bond. So think about this. If you think Verizon is going to outlive you, and it's going to be shareholder friendly, you don't have to do any more fundamental research. We did it for you. If it says shareholder friendly, you don't have to worry about the dividend. Okay, there's plenty of money. And they raise the dividend a few cents every year. Not a dime, but a few cents. If you think this stock's going to outlive you, isn't that a darn good passive income return? Yes or no? Somebody tell me that's 8% on your money if you buy the stock right now. But what is it if you have it on margin? If you buy the stock on margin, are you getting 8%? No, because you're buying the stock right now at 42, but you're only putting up 21. So on margin, it's 16%. Now, when I hear the word 16%, that's greater than the average S&P move. That's better than the index by 6%. So why would I be in bonds when I have stocks like this? So if you pay $14 and they give you $2.81, what's your return? 280 divided by 14 is 20%. Is 20% a good dividend, yes or no? Well, think about it. In 5 years, you paid off the stock. If it pays a dividend for 5 years, you paid off the stock. Now, let's go out of the money. Let's go out of the money. And I'm talking a 10 delta and sell a call. And you only get 1% a month. What is that? That's another 12% a year. So on your cash account, add up your 12% covered call, your 8% dividend, that's 20%. Add up your margin account, 12% plus 16%. That is what? 28%. Add up your 30% margin on certain brokers. I'm not going to say who. Very popular. Second biggest broker in the world. Oh, that's 12 right here. 12. Let me do it in a different color because this is impressive. 12 plus 12 plus what? 20 is 32%. So if you're getting 32% in passive income, is that a good return, yes or no? So I do like the short setup right here. Price action, I do like it right here. You guys see that? It's below this moving average. These are crossing over. We're getting the death cross here, the 20 and the 50. Target 1 is 1-to-1. Target 2 is definitely 2-to-1. And we got a short. Las Vegas Sands. Oh boy, are we too far off the moving average? Can I show you what I'm seeing here? Do you like how we put the price of the stock so you can look to the left and go, oh. This bounced off the 200, found support. That's why it's there. But we don't have that anymore, do we? We have no moving averages below us. The next stop is down here. This tells me to go to weekly, because see how long we've been bearish? Let's go to weekly. And didn't you think that Vegas type companies would be doing better with FIFA and all the soccer? Didn't you think? I don't know. I kind of thought that. Again, emotional decision. I'm seeing slowing momentum on a weekly, kind of far off the moving average. Not my favorite pick, but this would be a breakdown. Okay, so what I'm going to do is, and this is fun, pick Amazon. And like I said earlier, what's your favorite buy and sell signal indicators if you use any? And you can kind of mimic price action by going in here and using the stock price. But what you have up here is you have view and you have edit. You have long or short, daily or weekly, and then you have how many years of data do you want it to back test. Then over here, you can subscribe and it'll email you if you like what you see. And then down here, you have the stats, by which you're not limited to these 8 stats. You click this edit button, you can add more stats in here, right? Pick your favorite. Biggest win, biggest loss, whatever, right? Me personally, I like it this way because what I have here is I can compare the average gain right above the average loss. And that's my risk reward. The batting average, I got to see that. And Wall Street IO will stamp it if it's a good annual return. So far, just buying and holding, it's been a great annual return, right? 28% over the last 20 years. You're averaging 20. Okay, that blows away Verizon dividend. You're averaging 28% over the last 20 years. That's pretty hard to beat, right? So yeah, the buy and hold's been good on this. How about 10-year? 20%. How about 5-year? Oh, 5-year has only been 5%. See that? What about 3-year? Excellent. 1-year. 10%. So long-term, 20 years, it's been good. 5 years, not really good. 1%. 5%, right? See that? Below market. It tells you it's below market. You're underperforming the market. So it depends on, how many. To back test it, be careful because like 20 years, you're throwing in a few bear markets in there. I like to jump back and forth. That's buy and hold, never sell.